And I'm delighted now to be joined with Joe McMonigle. He is, of course, the Secretary General of the International Energy Forum. Joe, so much going on in this market at the moment. It's more dynamic, I guess, than it's ever been. Bring me up to date with your assessment of the global energy market right now.
Well, according to the latest Jody data update that the IEF hosts, the demand in March, for the first time since the pandemic, has exceeded pre-pandemic levels, but supply is only about 97%. And I think the conventional wisdom is the gap between supply and demand is all attributable to OPEC not producing more, but in truth, half of the gap is from U.S. production still not being back to pre-COVID levels. So we do have a supply deficit problem, especially as the world unlocks from COVID. But we need OPEC and non-OPEC to all start producing more. And on the demand side, all this is happening while we kind of have a softer return from China because of the current lockdown issues, and we're kind of in a transition phase. Is China going to be reopening? Do we think by the Party Congress in the fall, will there be a full reopening in China? And what will that do to already tight markets? And so I'm quite concerned, I think, about how things look the second half of this year going into the winter, especially as demand returns with heating and China coming back. I think we're looking at a very tough several months ahead.
Now, of course, the war in Ukraine has not helped the situation at all. So looking at, the situation with Russia and Ukraine, how has that actually perhaps, really held back progress, particularly in the market?
Well, I think it's important to realize that, markets were already in tight situation before the war in Ukraine. And certainly the war has exacerbated that. There's been kind of a political premium from sanctions and geopolitical risk. There hasn't been a lot of data yet in terms of if Russian supplies are off the market and is that impacting price and liquidity. And I think the analysts think about 1 million barrels from March has been off the market, and maybe as contracts end this summer that you'll see commercial contracts just not be renewed, and that may take additional crude off the market. But what you're also going to see, especially with crude, which is seaborne, you're going to see trade flows change. So maybe you don't see as much go to Europe or to the US, but you see it going to Asia instead. But at the end of the day, there's only, from a logistics standpoint, I don't know that there's only so much that Asia can really absorb, I think. But certainly, the world, as everyone knows, is a global commodity. Oil is a global commodity. So you're not just taking Russian crude off your market, you're taking it off the global market. And so it's going to affect liquidity and global prices.
Let's take a look at the global economic outlook. And, at IEF, you put a lot of strong reports together in terms of outlooks and what's happening. But when we look, and when you look particularly to the near term and to the future in terms of the global economy, how does that impact the energy sector?
Certainly the signs you're seeing, the World Bank and other big financial institutions downgrading global growth. I think, energy prices, high energy prices and volatility are definitely a headwind on the global economy. And to tell you the truth, I think we're basically in store for higher prices and volatility for the next 6 months to even a year, unless one of two things happens, and that's somehow the Russia-Ukraine situation normalizes. And by that I mean the energy supplies are more normalized and available on the market. And I don't know what the normalization of the geopolitical conflict is. That's somebody else's portfolio. Or we have a global recession and demand is greatly reduced. So I really think we're in store for higher prices and more volatility until one of those two things happens. So I'm quite concerned about forecasts of global economic growth, and certainly what higher prices will do in terms of global economic growth as the world continues to unlock from COVID.
when we look at the road to net zero, where everybody still wants to head, with all of these dynamics and so many of them very negative in the market, are we maybe being derailed a bit? What do you think?
Well, I like to say in recent speeches that I felt like energy security was in the back seat, or maybe early on, maybe even in the trunk. But now energy security is in the front seat again. And maybe it's still not driving the car yet, but energy security is solidly in the front seat. And I think the answer is we have to do both. We have to continue to invest in hydrocarbons to make sure we have the energy supplies we need to power the world economy and to supply economic growth and development for developing countries. And we have to pursue the transition and climate progress. And the thing that I'm most concerned about, if we mismanage this energy transition and the public starts to equate higher prices with climate policies or the energy transition, we will lose public support for climate. And so that's why it may seem odd for the head of an international organization to talk about we need more investment in hydrocarbon development, but I'm saying that because we need to manage the transition. It's not going to happen overnight. And I'm most concerned about making missteps in managing the transition that we lose public support to keep advancing along the way here. And so we're definitely at a critical phase.
And when we look at, I suppose, the financial risk too of the lack of investment, because there has been a lack of investment, how do we try and mobilize that? Because it almost, as you said, has to be two-tier. We still have to keep the lights on while we head to net zero. It's not an easy process.
That's right. Well, the IEF in December of 2020 with Boston Consulting Group released our first report on the investment crisis in the upstream market. Of course, prices were much lower there. Not many people paid attention. But it was really raising the alarm bell about what might happen in terms of prices and volatility. We updated the report in December of last year. Obviously, prices were on the rise, and so people started to pay attention to it. I think what we've seen is over the last 2 years of COVID, you've seen CapEx cuts by upstream NOCs and IOCs, although the NOCs have somewhat come back and invested a little bit more in CapEx. But basically, you've seen cuts of 25% per year compared to pre-pandemic levels. And what we've concluded is that really we have to get back to about an investment level of about $550 billion a year for the next 10 years just to meet growing demand, while at the same time we're pursuing the energy transition. And some people may say that's not even enough, but that's at least what we concluded with S&P Platts and the IEF. And we're updating this report. We'll have another one available at the end of the year. I'm not sure it's so much has changed in terms of companies investing in upstream oil and gas. I think there's still a little uncertainty about COVID, certainly about the world economy, and a lot of uncertainty that's resulted from the war in Ukraine. So we may be in store for another year of below pre-pandemic levels of investment, which is not good. It's 3 years in a row, and that just compounds the problem.
And indeed creates more uncertainty. I get the feel from listening to a lot of people we meet at conferences and other people that there's tremendous frustration in terms of what's going on with policymakers. Is there a need, or is it even possible that we have more connectivity and more sort of joined up thinking on a global level, or is that too much to hope?
Well, I have to say, I think as we talked about earlier, that the energy crisis was already developing before the war in Ukraine, and so it was basically higher prices and volatility were a backdrop for the COP conference in Scotland. And so you definitely heard, I think, more measured assessment of the global energy and climate world. And I think you started to hear very quickly after that conference, especially as the energy crisis got worse, as the winter continued, this theme about managing the transition. And this is new terminology that you did not hear a year ago. It was, we need to move quickly, it's going to happen overnight, it's going to be easy with just more wind and solar. And the realization is it's not going to happen quickly, and there's an impact on the pricing side of it. And I do think even among the very aggressive climate leaders in different countries, they recognize, I think, the need that this has to be managed carefully because of this whole part of the public, making a connection between higher prices and climate and the damage that would happen to making progress on climate policies and the transition. So I think there's a recognition. Obviously, there's different speeds at which we need to go about these things. But right now, I think we're entering a phase where there just is not enough energy, and that situation is going to get worse. And so that's, I think, the main focus right now, at least until the next COP meeting.
And again, when we look at all of the reports and outlooks, energy demand is going to increase. A lot of people still without access to energy. At the moment, do you think there can be a just transition that people talk about, or do we have to do a lot more to make sure that it becomes a just transition?
The energy access and addressing energy poverty has got to be one of the main priorities of the global community, much like we attack climate change, much as we attacked COVID and all came together. Energy poverty and energy access also has to have that same priority. The West seems to look at this issue through our comfortable lens, and some people don't realize this, but Heathrow Airport in London consumes more energy than the entire country of Sierra Leone. And this is something that just is not appreciated unless you go to the global south. And for them, this is an existential issue. As we go to these energy conferences, one of the things that's cited why we should not be investing more in hydrocarbons is that these will eventually be stranded assets. Well, in the global south, people are worried about stranded lives. And this is something that they have to deal with today. There's no energy. Someone remarked at one of our conferences recently, this is the difference between having light and not having light. And energy is oxygen, in these places. And so this is just not appreciated. Unfortunately, COVID has made the situation much worse. There's a growing gap now of those with energy and those without. And so that's why the world really needs to coalesce and attack this issue with the same vigor that we do on climate change and as the world came together to attack COVID.
Now, talk to me about the work that you're doing at the IEF and partly bringing the players together and making sure that these discussions are being heard and, that you're putting in place almost actionable items. The role of the IEF, I think, as a facilitator has really changed over the years and has grown so much. But you know yourself the importance of that. Yeah. Talk to me a bit about that.
Well, the IEF is very unique because we're the producer and consumer organization. So we're not just focused on consuming country issues. We're not the producers that are just concerned about production goals. We have to take into account priorities of both, and so there's a lot of commonality of interests. But I like to say, in addition to being the producer-consumer organization, we're also the developing world organization. And there's a lot of bridging of the gaps of those issues as well. And so when we get together for dialogue, we address all of these issues and try to come up with some commonality. And we see essentially three priorities to rebuilding after the pandemic and hopefully an end to the conflict in Ukraine. This is the investment in upstream that we talked about and why that's needed to power the global economy and make sure the public doesn't lose support for climate policy through undermining support with higher prices. The energy access is the other one. The third one is kind of a renewed investment in clean energy R&D. Because the IEA and technology report of 2020 essentially said, wind and solar renewables get us to about 50% of meeting our emissions mitigation goals. The other half have to come from new technologies. And these are technologies that are not at commercial stages yet or even invented yet. And so the world needs to invest more in clean energy R&D. I'm very proud of my government in the U.S. that has quadrupled the clean energy R&D budget. Italy and Spain and France have done similar steps. We need all countries to invest in clean energy R&D because certainly companies invest in clean energy R&D, but we should not be expecting companies to invest in the riskiest type of R&D work. And so we need countries to do this work. And so this is something we're encouraging member countries to do. Carbon capture, use, and storage is one area where we need a lot more investment. Hydrogen is also another area. And these two technologies, I think, among others, you could have fusion, many other different technologies you could choose from. But this is the pathway to solving not just the energy crisis, but also the climate crisis.
And of course, you need to bring all parties into this conversation. And, I'm sure that's, what you're doing, but looking, wider to the financial markets, risk assessor, all of that. I mean, how important is it to make sure that you engage with all players, all stakeholders in the industry?
Well, that's right. And the financial sector, the investment sector is a key area of focus for us because, the world is focusing on producer and oil and gas companies, and we want you to produce more. But one of the reasons they can't produce more is because their owners, their investors, want a better return on investment. So they want capital discipline. So we need to engage, I think, more with the investment community on the need for responsible levels of production. And we need their help. I think we've kind of tied one hand behind the back with ESG investing, and of course that's not very standardized, even though we talk about ESG standards. But that narrative weighs, I think, on this investment. It's not just capital discipline and investment returns; it's also socially, responsible investing, and that goes to ESG and SDG principles. And so we need to maybe have a rethink about some of these topics because otherwise we're going to be facing a lot more serious issues in terms of food insecurity and other potential social unrest because of the energy crisis and other compounding impacts.
Just before I let you go, just talk to me briefly in terms of, again, the dialogue that is there, the importance of the dialogue, strengthening that, but also perhaps, you talk about the financial community, you talk about bringing more people into it, but how do we bring, I suppose, the consumer in as well, maybe, and get that message out there? And also perhaps tell us what's coming up in the near future.
Yeah, well, I think policymakers have to be a little bit more honest with the public about what the choices are. And I don't think we have been very honest. I mean, I think we've kind of insinuated that the solutions to the climate crisis are easy, and they're not. These are really tough choices. These are complex issues. I think there's been a demonization of the oil and gas industry. That's not helpful either. We need the oil and gas industry to be able to scale up these clean energy solutions. And so there's a lot of work that needs to be done on the dialogue stage. I think we need to bring in other stakeholders like investors and the investor community. And so there's a lot of work to be done. We have 3 ministerial meetings, a natural gas ministerial meeting. We have an Asian ministerial roundtable that India will be hosting. And then we'll have our big IEF 17 ministerial meeting next year that Saudi Arabia will be hosting for the first time in about 15 years. So we have our work cut out for us. We'll have a lot of dialogue with top decision makers. And it's not just the ministers, the energy and environmental ministers that are involved, but now you're seeing leaders of countries much more focused and coherent on energy issues because it's so central to economic growth and the global economy.
Yeah, you're so right. It is. It's central to everything. So everybody needs to pay attention. And I think people are finding that out the hard way as well. Joe McMonigle, we have to leave it there. I want to thank you so much for being with us, the Secretary General of the International Energy Forum. Thanks for taking the time.
Thank you.